Welcome back. Let's talk about markets and inviting on the show Ashi Anand. He runs a digital disruption PMS. So the stocks that he owns in that include a PB Fintech, Zomato. Both these two have an approximately 20% holding. It's got Paytm, Nykaa, Infomart, Swiggy, IndiaMart, basically all the digital stocks. And the last couple of months have been rough. The fund has given a negative return of 15% in the last 1 month, and in the last 3 months, it's given a negative return of about 4%. So Ashi Anand is now with us to talk about the way forward. He also runs another PMS, which has got some concentrated bets. But Ashi, first on the digital stocks. Now, it's been a tough couple of months. Stocks have pared back significantly. What are you doing to mitigate the damage? And, at these levels, are you looking to add to your holding? Because you have cash of about 6% as of end Jan.
So, hi, first of all, thank you so much for having me on the show. We are honestly not too concerned about any of the recent price movements that you've seen. It's very important to understand that the digital PMS strategy was always positioned as a longer-term, quasi-private equity style investment approach. We are taking concentrated bets on what we believe to be the long-term outperformers in this particular space. We see very strong kind of growth, shift towards profitabilities, and therefore very attractive value creation over the kind of coming decade. Given how concentrated the bets are, a high level of volatility both on the upside and the downside is to be expected. And we've always been very clear that this portfolio is not something that needs to be looked at from a year-on-year kind of from a year-on-year performance perspective relative to the markets, etc. You look at it similar to kind of private equity. You're taking long-term bets and you kind of believe that over the longer term, this will outperform quite significantly. Just to kind of understand in terms of the current kind of decline that we've seen since January, we're down about 15%. This is kind of more than the large cap indices, kind of in line with the small cap indices. The largest kind of drive or the biggest kind of impact has actually been a fall in some of our larger weights. And Zomato and kind of Swiggy would be amongst them. Now, if you're looking at what is happening in these particular companies, what you are seeing is in this quick commerce space, a segment which has a lot of value over the longer term. It's tremendous kind of growth potential. The overall size is actually many multiples of the existing food delivery business. You have the entire grocery kind of potential moving towards this as a very, very attractive new channel. Now, this space is still in relatively much earlier stages of maturity as compared to the food delivery business. You are still going to have multiple new players coming in. They are going to be sitting and fighting for market share. We believe it is very, very important that Blinkit and Zomato and Instamart and Swiggy actually invest upfront, right? So this could be in terms of new store additions. It could be in terms of increasing discounts to mitigate new competition coming in. It is more important to really focus on cementing your position and ensuring that you are one of the 2 or 3 long-term winners in the space as compared to focusing on profitability over the shorter term. So just the way we look at the space, we are actually very comfortable with these companies increasing investments. We are not too perturbed about the fact that Blinkit, for example, has gone from EBITDA break-even to EBITDA losses. We would also not be too perturbed if losses were to increase substantially. As long as the overall unit economics, the overall growth and cementing the position remains. Now, this is kind of really, and that's why we, multiple times we use this word quasi-private equity. When you're looking at these companies, you're really trying to ensure that you cement your longer-term positioning and your longer-term outlook. And for that, these companies very often may have to invest in the near term, which could impact profits. This is very good long term, but it may not be considered positive from the markets in the shorter term. This really, according to us, presents a very attractive opportunity. We are sitting on cash. We are looking at deploying the cash. We're just waiting for the kind of current market sentiment to turn, but we see this is a very attractive opportunity to buy into what we clearly believe to be the most attractive opportunity for India over the coming decade.
Right. Ashi, so within the list of stocks that you currently own, where exactly will you be deploying the additional cash? Will it be in the quick commerce space? Will it be in the fashion and beauty space? Where do you see more opportunity?
So without really getting to where exactly we will be deploying, let me just tell you the spaces that we find interesting. What we really like about digital are platform businesses. where they kind of connect a large number of buyers and sellers and say other network participants together at the onto a single platform. The stronger the value of this network, the more attractive the business. Now that's kind of where we've always been very strong bulls on the Zomato and the food delivery and the quick commerce space, and you now also have Swiggy, which is available. Both of which are what makes these models very attractive is these are actually three-sided networks. There's a customer, there's a restaurant or a dark store in the case of quick commerce, and there is your delivery partner. Replicating this is something which is going to be very, very difficult for any new entrant to come in. And we therefore believe that the competitive moats in this space are very attractive. The longer term growth potential is also very attractive and continues to be clearly the top weight that we have. We also see a lot of value in different forms of fintech. It could be a payments form of business. It could be insurance tech. It could be new forms of wealth tech. There could be, and there's certain new kind of businesses coming in the pipeline to be listed. We see a lot of value in that space as well. And we also believe there's intrinsic value in certain kind of horizontal focused e-commerce players that are focusing on a particular narrow niche. All of these are very interesting bets. Where we choose to deploy the cash should really be in terms of relative opportunities and relative upsides that we're seeing over the medium to the longer term.
India Mart, you seem to have raised your weightage in India Mart compared to what it was a couple of months back. It's now about 4.5% of your overall portfolio. What is it that you like in India Marts? Because numbers have been disappointing. The number of paid subscribers that they've been adding, in fact, turned negative in the quarter gone by.
So just to confirm, we've not increased our weight. What you're actually seeing is the impact of relative movements. So the Zomato and PB fintechs would have moved down more. And that is why kind of the weight has increased because of price performance on other stocks. We've not increased our weight. Yes, results have been disappointing. This is a kind of company we are tracking really closely. Most importantly, right, is the value of the network intact. That is something that we believe is relatively intact. They are clearly facing certain short-term challenges, primarily related to kind of subscribers in this silver bucket, where there is a high level of churn. We believe the management does clearly kind of need to come in and address this, right, to be able to demonstrate value of the platform to kind of consumers in the silver bucket. This could involve more aggressive sales. It could involve better kind of customer service in order for them to be able to ensure that you are reducing churn. We believe these are challenges which are kind of addressable, but it may take some time, a few quarters for this to be addressed. Given that said, valuations are now extremely attractive for what is kind of India's largest B2B classifieds business. So we are aware of the challenges. It is something that we are monitoring quite closely. But overall valuations really are quite attractive and do, according to us, factor in a lot of these current slowdown challenges.
Right. Thank you so much, Ashi, for joining us, giving us a sense of the new age portfolio that you run and how exactly you're finding opportunities within that. Time now.